I trust my voice is very much audible to all of you. And once again, good afternoon to all of you, and welcome to today's discussion on outstanding receivable from a transfer pricing perspective. So we all know that it's very common when associated enterprises enters into a transaction with each other. From an India perspective, there could be some receivables which are outstanding at the end of a year. That amount of a receivable may be XYZ, it may be 10% of your sales, or it may be 20% of your sales made to associated enterprises. But the question comes whether that outstanding receivable, the receivables which are outstanding at the end of a year, should be considered a international transaction or not. So, Finance Act 2012, there was an amendment and explanation was added to the definition of section 92B. And therein, explanation 1C was added to section 92B. And therein, the scope of capital financing was increased. It was, if you see the act, it says capital financing, including any type of long-term or short-term borrowing, lending or guarantee, purchase or sale of marketable securities, or any type of advance payments or deferred payments or receivable, or any other debt arising during the course of the business. So most of us started battling on, what constitutes receivable. So whether every receivable which is at the end of a year, which is getting reflected in the balance sheet, should be considered as a international transaction, and should we report the same in the Form 3CB and transfer pricing study, and whether that receivable needs benchmarking or not. But does this receivable only covers the year-end balance, or during the year also you might have some receivables which are there with the associated enterprises, and whether those receivables also needs to be reported or not. The cases were selected for the scrutiny. Transfer pricing officers across India started following certain thresholds. Maybe if the delay in recovering or the aging, they started doing the aging of outstanding receivables. If it is more than 30 days, in some cases they propose the addition. In some of the cases, instead of 30 days, the officers took 60 days. In some of the cases, 90 days. But primarily based on certain aging which they did, and if there is a recovery, delay in recovery more than that aging, the addition was proposed. Sometime in order to see the aging, what constitutes outstanding receivable from the perspective of transfer pricing, the officer also resorted to the agreements between the associated enterprises, or some kind of an arrangement, or invoices wherein the credit period is written that you should clear the invoice within 7 days or 30 days or 60 days. And wherever the recovery was, beyond that 30 days, 60 days or 90 days, which was written in the agreement or the invoices, the officers proposed, or the department proposed, the addition. Sometime in order to benchmark this, they also took what is the threshold in general in the industry, which I was mentioning 30, 60, 90. So now the next question was, okay, if there is a delay of more than 30 days or 60 days, whatever the threshold is set, how much should be the interest? So there are different practices have been followed. One can see in the few cases, the officer proposed the fixed deposit rate as a interest, SBI fixed deposit rate as the benchmark interest. In some of the cases, one can see that they resorted to the PLR rate. And in some of the cases, LIBOR plus 400 or 500 basis point were taken. And the addition started taking place. The cases went to the court. Now, the first question the question which came into the front of the tribunals or the court was whether this outstanding receivable constitutes international transaction or not. And if we see, a number of cases, even the courts have proposed the addition. So one can safely argue from the trend, or one can safely interpret from the trend that yes, it is an international transaction, which the outstanding receivable is an international transaction, which certainly calls for a arm's length pricing. But then came the judgment of a Delhi High Court in the matter of Kusum Healthcare, which became a landmark judgment. In the Kusum Healthcare, the Delhi High Court said the expression receivable does not mean that dehosts the context every item of receivable appearing in the accounts of an entity should be read as international transaction. That is, if there is a receivable outstanding in the balance sheet, it does not automatically takes character or color of receivable. And this one can see that this judgment is followed by various courts and tribunals, and the SSC also use the judgment. Importantly, the court never denied that receivable will not become an international transaction. But court said that just because it is receivable, it will not become an international transaction. One needs to look more into the facts of the case and whether there is any benefit which has been passed on to the associated enterprises or not. What is the trend in last 2-3 years? And based on this facts analysis, one may conclude that this receivable is indeed a financing in nature, and being it is financing in nature, it should be seen as international transaction. So wherever the officer or the department automatically treated every receivable as a international transaction, therein this judgment came very handy or useful for the taxpayer. Though they were applying certain thresholds of days, maybe 30 days or 60 days. But certainly the argument was that it is an automatic application of the threshold, that anything which is beyond 60 days or beyond 30 days will qualify as an international transaction. So courts objected to that. So now if we see the various judgments which have come up because of Kusum Healthcare, and even in the Kusum Healthcare also, what the court said that if, let's say, the margin earned by the taxpayer, let's say, is 20%, or let's say net cost plus margin earned by taxpayer is 20%, whereas the range which the comparable range is, let's say, 7 to 10%, or the median margin is 10%. In that case, one can see there is a good differential, a very good margin is earned by the taxpayer. Now, if there is a receivable outstanding, then one may safely argue that the extra period which has been given to the associated enterprises has already been factored into the pricing. And that's why the margin is on the higher side. So this was very common argument taken by the taxpayer, and very well appreciated by tribunal and courts in light of Kusum Healthcare. Then also the another facts which came, let's say if the other fact scenario could be, see, one fact scenario we have seen that it is an international transaction, but before we it qualifies to be an international transaction, certainly the taxpayer or officer needs to do slightly more homework, and just because it has just crossed the threshold of uh, 30 days or 60 days, not automatically it will become an international transaction. So one needs to look into the facts of the case in order to say it is an international transaction. Now, if it is an international transaction, which we agreed that it is an international transaction, does it deserves some arms and price, or does it deserves addition or not? The first fact scenario is that the margins of the taxpayer is on the higher side. The margins of the taxpayer, the example that I took is, let's say, 20%, whereas the margin of comparable companies comes around 7 to 10%. Then one can safely argue that the higher margin is because the one of the factors to which the higher margin can be attributed is the higher credit period which I am giving to my associated enterprises. And courts accepted, or the tribunal accepted this point. The another fact pattern could be that though my margins are not high, but if I do working capital adjustment, then after doing a working capital adjustment, my margins seems to be on the higher side. Now, if after doing working capital adjustment, your margin seems to be on the higher side, then court said, because now working capital adjustment is taking care of the outstanding receivable, you need not do a further addition. Again, this come handy to the taxpayer. But yes, the challenge was, working capital adjustment only takes care of the year-end balances and on the balances which got knocked off during the year. So still, one may evaluate that, what were the balances, what were the receivables which got generated during the year, which got set up during the year. But yes, there is a considerable period for those receivables, maybe 6 months or maybe 3 months, depending upon the normal pattern. And if based on that analysis, uh, the authority comes up with the view that no, okay, your year-end receivables are taken care by working capital adjustment. But yes, during the year, if there is receivable any outstanding for a longer period, that can be seen as a financing. They can very well propose a transpricing addition. And this is the point, when we place faith on Kusum Healthcare and when we place faith on working capital adjustment, uh, the taxpayer also must see that what is happening during the year, which is not getting captured in the balance sheet. Because if, let's say, you are raising invoice in the month of May, and knocking off in the month of January or February, so the same may not be getting reflected in the balance sheet. But yes, whether that period constitutes higher period or not, and because of that higher period, whether it will become a international transaction or not, is something which needs to be analyzed and documented. The another fact pattern could be, let's say, I am having transaction or the taxpayer is having transaction with the associated enterprises as well as with the non-associated enterprises. In that case, what are the terms and conditions with non-associated enterprises are there that needs to be evaluated, and that's sometimes, or maximum of the times, that becomes the benchmark. Now, if with your non-A, you are not charging any interest for outstanding receivable, then certainly, one can take a position that if I'm not charging interest from unrelated enterprises or non-associated enterprises, then I should also not charge interest from associated enterprises. Well, this is what the comparable transaction is. So we have a cup, and in that comparable transaction, we are not charging interest from unrelated parties. So we can adopt that theory and we can say we will not charge interest from related enterprises or associated enterprises. So when this fact pattern went to the court, certainly tribunal and courts, they ruled in the favor of the taxpayer, because you are not charging interest from A, you should also not charge interest from. You're not charging interest from non-A, you should also not charge interest from A's. The another fact pattern in case of outstanding receivable could be, let's say you're a debt-free company. So if you're a debt-free company, whether there should be a interest cost on the outstanding receivable or not. The question went again in front of the Delhi High Court, and in the Bechtel, the court observed, being a debt-free company, uh, it does not warrant the interest addition because you are not paying interest to creditors and to other debtors. So somehow I don't agree to this view, and in my view, if it is not only about the cost, but if somebody will receive the money and if they will going to put it in the bank, they will going to earn something out of it. So if we conclude that the outstanding receivables uh, outstanding receivables can be classified as an international transaction, then certainly even if I'm a debt-free company, then also one may uh, take a position. One at least at the time of TP study, one may take a position that it is outstanding receivable and there should be some transferring adjustment to the same. Uh, Rather at a planning stage or a transaction stage, one should try to avoid having too much of outstanding receivables. But yes, the view of the court is in the favor of the taxpayer. Now, the another fact pattern could be, let's say, you are having a transaction with associated enterprises, you are having a transaction with unrelated parties or non-associated enterprises, and there is a credit period given to those non-A's is different from the credit period given to A's. Or if you are charging interest from non-A's, then you should also charge interest from the A's. So wherein there are transactions with the A's, generally the transaction with ACE becomes a benchmark, and whether we are charging interest or not charging interest is something we need to uh, you know we need to evaluate from a non-A perspective, because then non-A becomes the cup transaction non-A becomes the comparable and controlled price, and those terms needs to be followed when there is a transaction with associated enterprises. Now, the another fact pattern could be we are having an outstanding receivable, and let's say the fact pattern suggests that it qualifies to be an international transaction, but there is no transaction, no independent transaction, or no transaction with uncontrolled enterprises. Then what to do? In those cases, the question was, okay, if the aging, after doing the aging analysis, beyond 60 days, we are finding, okay, we are concluding that these 3, 4 transactions will qualify to be an international transaction. Then the question came, what should be the interest rate? So I said, the tax authorities use different interest rate. In few of the cases, one can see that what is the interest on fixed deposit was used. Then interest PLR was used, and sometime LIBOR plus 400 or 500 basis point was used. So now there is a well-settled principle that most of us are following when it comes. If it is a financing transaction, and if the transaction is, let's say, in the USD, then you should not take a loan which is applicable, interest rate which is applicable on Indian currency loan given in the Indian market. So when we are giving financing to the foreign country, maybe US, or you have a in the US from which receivables are outstanding, then what should be the appropriate interest rate will depend upon the US market. What is the interest rate prevailing in the US market on USD loan? That is something one needs to adopt for the purpose of benchmarking. So in most of the cases, one can see the tribunal and the courts, they ruled against the tax authorities, and they proposed that LIBOR plus 200 basis point in most of the cases, one can see, was considered to be the arm's length interest rate as far as outstanding receivables were concerned. So this was a very short and precise on the outstanding receivables. I think I covered almost all the fact patterns which are available. If you have any question for me on the outstanding receivable, you may raise your hand and discuss with me. I would be happy to unmute you and take your questions on the outstanding receivables. Friends who have joined late, let me tell you, this session is available live, is also available on my YouTube. You can go to my YouTube channel and watch this session again. But if you have any query for now, feel free to raise your hand and I would be happy to share my perspective with all of you. Any questions for me?
Hello.
Yeah, please, Rishu, please go ahead.
Sir, whether we should report the receivable balances in 3CEB?
So I think that is a very good question. Whether the year-end balances, I'm assuming, Rishu, year-end balances you are saying they should be reported
Yes,
or not.
yes,
Correct. So if we go by the Delhi High Court judgment in the matter of Kusum Healthcare, Delhi High Court said just because it is receivable, it will not become an international transaction. Just because it is outstanding. Hmm? So one, you may, as a chartered accountant, because as a chartered accountant, you need to report. You may report it, but I think before reporting, do the aging analysis. Uh, Whether it is within 15 days, 30 days, 45 days, or whether the aging analysis shows that it is for more than 150 days or 200 days, and try to find reason for the same, because documenting is also very important. And if you feel that, out of abundant caution, you need to disclose this transaction, then you may mention this in the Form 3CB that though it is not an international transaction, but out of abundant caution, you are disclosing this transaction in the Form 3CB. Because if I go by Kusum Healthcare, by Delhi High Court in the matter of Kusum Healthcare, then for each transaction, each invoicing, you need to evaluate separately. So if your client has raised 12 invoice during a year or 1200 invoice during the year, then for each invoice, you need to evaluate separately whether it will qualify to be a international transaction or not, which may not be possible for a chartered accountant. And also the guidance note of ICI says disclosure of international transaction and the ICI guidance note says identification of AE is the responsibility of the management. And now what constitutes international transaction or not is something again the responsibility of the
management.
the management, because management will tell you what is the threshold they need to adopt. So based on the TP study, your role is to only reporting. So first of all, it needs to come in the TP study that yes, it is an international transaction. Are you getting my point? And then from there, you will pick it to the Form 3CB.
Okay, thank you.
Thank you, Rishu. Any other question for me? If you have any other question, feel free to unmute yourself and ask. So I think we are done with today's discussion. Thank you everyone for joining. I'm hopeful that it must have been useful for all of you. Thank you and see you soon.
Thank you.